What are the requirements for taking a home equity loan? If you are considering a home equity loan, you might be wondering what you need to qualify. This type of loan can be a great way to cover expenses, including medical bills. Let's break down the key requirements you should know about. First, you need sufficient home equity. This means the value of your home should be higher than what you owe on your mortgage. Typically, lenders allow you to borrow up to 80% to 85% of your home's value minus your mortgage balance. For example, if your home is worth $100,000 and you owe $100,000, you may be eligible to borrow up to $120,000. Next, your credit score plays an important role. Most lenders look for a minimum credit score of around 620. However, a score of 680 or higher is preferred for the best interest rates. Your credit history should show responsible borrowing, including on-time payments on existing debts like credit cards and loans. Another factor is your debt-to-income ratio. This ratio helps lenders assess your ability to manage additional debt. A common threshold is a debt-to-income ratio of 43% or lower. This means your total monthly debt payments, including the potential home equity loan payment, should not exceed 43% of your gross monthly income. You will also need to provide proof of income and employment stability. Lenders typically requiring documentation showing steady income for at least 2 years in the same job or industry. This can include recent pay stubs, W-2 forms, and tax returns. They want to ensure you can consistently repay the loan. Additionally, a property appraisal is necessary. This appraisal determines your home's current market value and must be conducted by a licensed professional. The appraisal is usually valid for 6 months and helps lenders assess how much they can safely lend. Lastly, you will need to provide other documentation, such as personal identification and proof of homeowner's insurance. Some lenders may ask for additional financial documents based on their policies. When using a home equity loan for medical expenses, the requirements remains the same. The purpose of the loan does not typically affect qualification, but remember that this loan is secured by your home. If you fail to repay, it could lead to foreclosure. Credit unions may offer competitive rates and more flexible qualification standards compared to traditional banks, making them a good option for many borrowers seeking home equity loans. To sum it up, to qualify for a home equity loan, ensure you have enough home equity, a solid credit score, manageable debt levels, stable income, and a recent property appraisal. Meeting these requirements helps lenders minimize risk and ensures you can handle repayment.